Well, much of the business community's focus lately has been on Australia's developing relationship with China and India. Japan remains our second strongest trading partner. As well as trade, Japanese investment here continues to grow. In fact, the Japan Bank for International Cooperation, a government-controlled finance house, has just been given a new mandate to bankroll offshore acquisitions in resources and agriculture. The move is designed to counter the effects of the soaring yen and the growing influence of China. To discuss the implications, I'm joined by Westpac's senior currency strategist, Sean Callow. Sean, what's been the fallout of what's happening in Japan over the past year?
Well, particularly the earthquake obviously had a huge impact on the Japanese economy, so it clearly set back their exports very much. But also the fact that it raised concerns over the nuclear industry meant that there was a little extra pressure to look for resources for new energy supplies. So Japan is already Australia's largest export destination for liquid natural gas, as well as coal. So that's an area where they're looking to increase their investment, but it also goes to other areas as well.
Yes, and this announcement of support effectively from Japan itself indicates that there could be a lot more coming through very soon.
Yeah, very much so. I mean, one of the factors that's worried Japanese policymakers the most over the past couple of years has been the strength of the Japanese yen. So while the Aussie dollar is strong against many currencies, it's not particularly unusually strong against the yen. So rather than acting in the money markets as they did many times to buy US dollars and try to weaken the yen, they spent about $186 billion just trying to weaken the yen in the currency markets. This is a far better way to try to encourage private Japanese companies to invest offshore so that they can invest in all ranges of industries, but in the process also weaken the yen.
So as you say, all range of industries, not just resources, raw products. Obviously, with Japan's very small size, they're always looking for agricultural product, but it goes beyond that too.
Yes, yeah, that's right. So energy is always an issue with Japan, given the size of their population relative to the size of their land mass and the lack of natural resources. So that's always going to be an issue. But food as well, and beverages, but also just for growth. The Japanese economy's been growing slowly for quite some time. They do have extra need to rebuild after the reconstruction after the earthquake, but yeah, we've seen investments in areas such as beverage companies as well in Australia recently. So it's quite a range of industries. And
property too, I understand.
Yes, property and finance as well. So it is very broad. And of course, Japan has been looking to Australia for many years as an investment destination, and it's usually very well received. It tends not to have some of the problems China has in terms of foreign investment approval because they're not government-owned companies, they're private companies.
Sean Callow, thanks for that analysis.
You're welcome.